Joining me at the desk is Aadil Zaman, Wall Street Alliance Group partner. Thanks for being here.
Pleasure.
So we've been trying to follow the sort of day-by-day developments in this AI arms race. Reportedly OpenAI declaring a code red recently because of the increasing market share of Gemini. As an investor, how do you know where to look, what to pick? Do you just invest in it all? What do you do?
I think you do have to have a core exposure in all of these companies because it is an AI arms race, and a lot of these companies, their businesses are good. But we do feel that at this point, they've run up a lot. They're trading on expectations of the business that they're going to do 5 years from now. And we feel that a pullback in the market is imminent, and these are the companies that are going to get hit the most when the market does pull back. So we've been talking to our clients about the leadership in the market changing from the AI winners to the AI enablers.
Okay, I want to get to that in a minute, but I do want to ask you about this latest headline that we got about Microsoft, the information reporting that Microsoft is lowering its AI sales quotas. And this brings me to the question I was just discussing with my colleague Dan Halley, which is not just where's the adoption going to be, but where is the money going to be spent, which kind of speaks to your AI enablers versus, who's putting it out in the world. Where is this money going to be spent? Or do you look at where it's being spent now?
Yeah, I think we think that a lot of it is going to be spent on data centers because a lot of this money, the AI related data centers, we expect that by 2030 are going to triple and globally. And we feel that north of 7 trillion is going to be spent globally on AI related infrastructure. So companies that are involved in building and maintaining those type of data centers and the infrastructure companies, that's where we are seeing more value right now.
Well, but I guess my question is, we know the money is planning to be spent on those data centers. Eventually, you got to bring in more revenue to fund those data centers. Now, the hyperscalers that are out there now, the Alphabets, the Microsofts of the world, they have lots of cash to do this, and they are starting to make some revenue related directly to AI.
Sure.
But especially the likes of OpenAI are going to have to make a lot more in order to continue to fund that $7 trillion that you're talking about.
Yes, and that's where we think the risk is, right? Because a lot of them are trading based on expectations that they're going to draw in that profitability. But we just feel that at this point in time, and then also what we are seeing is that a lot of them are benefiting from that bonus depreciation in the big beautiful bill, which is pulling forward a lot of that capital spending. So the balance sheets are looking really good now, but when the time comes for the show me, like when the revenues are coming, that's where we think there could be some vulnerability in these names.
Okay, so as you say, look at the infrastructure builders now, and you're not talking about an NVIDIA, for example. You're talking more about the actual physical stuff. I mean, NVIDIA makes chips, but the buildings, if you will.
Yes, absolutely. We are talking about like the brick and mortar companies. So if we believe that AI is real, which we think it is, then we have to invest in the companies that build the infrastructure that makes it possible for AI to exist. So we are talking about construction, equipment, utilities, electricities. These type of companies are necessary for AI to do well.
What do you think about this now what's become a sort of new battleground about electricity prices, which in some jurisdictions, the data centers have been pushing up those prices. How is that push-pull going to work out for the companies that are trying to build this infrastructure?
I think a lot of these companies, because the prices are going to go up, there's a lot of demand for this. So a lot of these companies are going to really benefit from it as well. And we've talked about this on the show before. We've been investing in utilities. We've been overweight that sector for the past 2 years. And they are a direct beneficiary of this AI build out because electricity is going to be needed.
Right. Okay. So other than that, I am curious where you're looking for opportunities. We've been talking a lot about Bitcoin recently, so I'm curious how you're thinking about that in terms of how clients should be positioned.
Yeah, in terms of Bitcoin and clients, I think we view it more as an asset diversifier, right? Like for us, one of the best investments so far has been gold. right? Gold, we've been consistently investing in that. That has been one of the best performers this year, up more than 50%. Similarly, we view Bitcoin. And I think this sell-off in Bitcoin is possibly an opportunity for those that missed out on the rally to get involved. And an easy way to do it for our clients is that Bitcoin ETF, IBIT, we have exposure there. And a lot of the sell-off is probably driven by potential unwinding of the Japanese carry trade, where risk assets are being sold. So I think that's an opportunity to position into an alternative asset class for clients.
Okay, Aadil, thanks so much for coming in. Good to see you.